The US stock market rallied up after the CPI data came in, and Tesla reported earnings. Next week, there are going to be some earnings that are going to be come up, especially in the tech sector. More than 100 reports are expected in the US stock market. Now, with this data that is coming up and also the Fed decision that is coming in, I have been taking some trades and sometimes and even trimming some positions. In this video, I share with you my trading strategy and how I am preparing for next week and even the long term. So make sure you subscribe and follow me for more insights. Remember also, this video is not supposed to be taken as investment or financial advice. So let's dive. The first thing that I will say is that I'm going to be regularly sharing with you guys my thoughts of what's happening in the market and giving you these reports. But because I had some two videos that I had actually prepared for Saturday and Monday, I'm just going to do this as a bonus. But starting next week, tune in every Saturday so that I will give you guys a market update. It's been a while since I have given you guys an update on the portfolio that I shared with you guys. One of the accounts that I trade in, I just want to see where at the end of the year I will be. But again, whatever I share here, it's not supposed to be taken as investment advice. Today, I had a nice profit, $215, and I am mostly in cash. You see that this account, I started it with 15,000 for those who have been following this account, and I have grown this account by almost now 82% against the S&P, which has gone up, I think, by about 15%. So far, I've been beating the S&P 500. I usually deploy options, and my strategies that I share, those who want to learn more, you can sign up on www.streetwiseeconomics.com. You will see the link here. The idea is that this week, what has been happening in the market, and particularly this year, the past, I would say 8 months, has been marked by a lot of volatility. And the CPI data, because of the government shutdown, has not been released. So today, when this data was released, what came out, what stood out for me was that the CPI data, which measures the price change in this case over different periods of time, in this case, when you look at the 1 month, it came out lower than expected, 0.1% lower than expected. Analysts were expecting 0.2%, and it came out at 0.3%. But the core inflation is still at 3% if you look at the year on year. On average, the US, they want to maintain a 2% yearly inflation rate. That's acceptable. Now, after this data was released, markets roared in approval. The S&P 500, which is a broad basket of about 500 publicly listed companies from different sectors, it rallied up, showing approval that, next week on October 29, the Federal Open Market is going to cut the rates. But what's going to happen is that when that happens, a lot of people will be also watching the tone of the chair, who is going to take some questions and share some insights into their thinking and where they see their, analysis and the economy going. So for those who also follow Tesla, they reported their earnings this week. They did beat revenue. It came out as 28.1 billion versus 26.5%. In other words, it grew much higher than what analysts expected. But again, they reported costs and increasing competition as squeezing their profits. So the stock, even though it rallied, it was down today on Friday. So these are the data points that came out according to Bloomberg. And you can see here that if you look at the CPI, the core CPI, I like to look at the core CPI. That's the Fed's most preferred rate, right? It means there is a good chance that, in my view, the Fed might lower the rates by 25 basis points. And according to the Fed Watch, CME Fed Watch 2, they say there is a very good probability, and I'm going to share the statistics with you that the rates are going to be reduced. Again, I am mostly cash heavy, and I bought some shares for the UVXY, which is more like the volatility index, the ETF that tracks its leveraged. In other words, if the market it drops by even more, right? In other words, the VIX, my thesis is that if the market has really been going all-time high, if it pulls back, and especially because of the volatility and the high stakes meeting, Fed meeting next week, and anything else, let's say President Trump says something that might actually trigger the market, equities market, to drop. Usually the volatility index, it spikes like it did last week. So I usually cash out, but if the market continues to go up, it's going to go down. So when I'm trading and investing, I don't like to look at one direction. I like to go long, in other words, to be bullish, but also I like to have a hedge in case maybe you wake up, the market is 40-50% down. That's when I usually even cash out and then go long on the equities market when the prices have really dropped. And I have a bit of cash because I have been trading in and out mostly in my margin account. So you will see that gold also is a hedge that most people use. It was trading at 4,103 per ounce, and that was still a negative 0.6% drop from yesterday's price, but it also even dropped much further, I think 5% at the beginning of next week after a brief rally. I guess people were taking some profits. And what this means is that at the end of the day, the most important thing is to manage your cash position and to manage your positions. Some people, they like to see the profits is unrealized, but sometimes what happens is that if I see nice profits, I like to trim and also kind of like manage risk, because the market can go in any direction, right? So I also took a leap when DEC reported their earnings. They did beat earnings expectations, but they gave a soft guidance, and it plunged by at least 37.5%. And I took a trade on that, and I'm going to share more about that. The earnings bonanza, we're expecting 100, even over 100 reports. Like I said, big tech, I'm going to keep an eye on Amazon, Microsoft, Apple, to see, because what happens is that they kind of like indicate what these guys are thinking, their guidance, what they see in the economy, because they deal with suppliers and other stakeholders across the economy. So that is very, very important. Again, it's extremely difficult to forecast whether they are going to beat or miss the earnings. What I do is I like to focus on few stocks that I follow like a hawk. And what I do is when they drop, I usually deploy long dated leaps, and I trim my profits when I see some profits and then move on to the next one. Now, oil, it actually had a lot of volatility. President Trump, the White House sanctioned, the US sanctioned Russia, and that took a hit on the oil market. So the oil prices, they really went up. So that's something that I found interesting. On the consumer, Coca-Cola and PG, they are very interesting to watch the spending indication, like how are people spending money. Now, as volatility spikes, for me, that's when I like to see the impact of the hedges. So, as I said, the probability, according to the CME FedWatch, of the 25 basis points is 96.7%. Usually they've been right most of the time, but this is very interesting because they may still reduce the interest rates, but the market, equities market in the US might still drop, but the expectation is that it's going to rally if the Fed chair doesn't say anything that might potentially spook the market. But again, nobody really knows. So even though we have a much bigger odd of the rate cuts, 25 basis cut, it might be higher, it might be lower, but this 3.3%, it tells me that nothing is guaranteed in this market. So that's why I like to have a small exposure to a hedge in case things don't go the way most people expect. And Now, after the S&P 500 passes the 6,800 resistance, it's most likely now going to continue to rally. If it does, then that means those who are invested are continuing to reap the benefits of staying invested in the markets. Again, my view is that predictability is extremely difficult. There are unknown things that can happen, but at the end of the day, I like to manage my risk and also keep an eye on what's really going on in the market. In terms of my position sizing and trades, I like to manage the risk ruthlessly. I like to take profits very much because at the end of the day, profit is not profit in my view unless it's actually realized. So today I took a long dated leap for 3K for the stock called deck. They had a revenue beat, but they gave a guidance that the investors didn't quite like. But I was looking at their balance sheet because of the tariff. I think that's why also they are also, the stock really dropped. If President Xi and President Trump meet and the issue of the tariff is resolved amicably between China and the US, most likely most of these stocks that rely on China might, in terms of the supply chains and stuff, they might, in my view, continue to go up. So that's my view. Again, because sometimes investors tend to overreact, I like to take these long dated leaps. Again, this is not investment advice, it's just what I'm comfortable doing. Maybe next week it might even go up. Once it goes back up, I'm going to close the position and take the profits and move on to another one. So that's what I do. I took a strike price of $85, and that's what I have been doing. Is if there are stocks that I'm following and they really drop, I've been trading quite some very interesting stocks like SoFi, Archer, and they've been giving me some very good returns, and I've been repeating that, and I wait for them to retrace to certain levels, and then I deploy, take profits, repeat and recycle. And like I said, I like to hedge and manage the risk in case the equities market, we wake up, it's down 10, 20 or whatever percentage, I'm most likely going to cash out from the volatility index hedge that I shared that I had a position on. So these are my takeaways for this week. The markets, as I've seen, it rewards patience. The S&P 500 uptrend proves it. CPI green light and the Fed pivot is something that is also welcome. So at the end of the day, the most important thing is I am still continuing to have a bullish bias, but I'm also not naive that the market is going to go up in a straight line. No, there might be pullbacks or even potential crashes, and also even the fact that there are companies that are really overvalued. So I'm focusing on those companies that I believe to be undervalued and deploying capital so that even if the market drops, I will still have a good margin of safety. So tune in next Saturday for post-Fed recap. What's on top of your watch list next week? And drop likes, subscribe to fuel these weekly drops. Like I always like to say, trade and invest wisely, my friends. Make sure you tune in to the next updates and see you in the markets. Bye bye for now.